Welcome back. You are watching a Metropole Television. My name is Elijah Charles Kiage. In case you're just joining us, this is a Business AM. We're online at Metropole TVKE across all your social media platforms. This is our official sector trends where we tend to sit back and tell you exactly what you need to learn in the economy, all sorts of different industries and sectors. So this morning, we do have a Standard Chartered in-house, but I'll be telling you exactly how we're going to look at why they're in-house. Let me get into that introduction before we get to introduce the guest who's joining us this morning. Now, Standard Chartered Bank, in collaboration with Sanlam Investments East Africa, that is and Mangosteen BCC Pte Limited, in February launched SC Shilingi Funds. Now, this is a low-ticket money markets fund proposition for Standard Chartered Bank. Now, the 100% digital investment product available on the SC mobile app allows clients to invest amounts as low as 1,000 shillings and competitive interests and withdraw funds anytime. Today, we feature this money market fund and also get an in-depth look into how the money market fund in Kenya works. Now, joining us today online, we do have a Paul Njoki, who is the head of wealth management, Standard Chartered Bank. Mr. Paul Njoki, how are you doing, sir?
Good morning, and thank you very much for having me. I'm well, and you?
We are fantastic. We are happy to have you around. Now, Paul, when we have conversations on money market funds, for me, I like to dial back and speak to any other person who doesn't know what a money market fund is. Let's begin from there before we get to know how Standard Chartered came up with this. Paul, for our audience this morning that wants to understand what a money market fund is, what would be your simplest definition of this?
Okay, thank you very much. So a money market fund is an investment in financial markets that involves clients pulling their money together. So I will have my money, you have your money, and everybody else, and we put it together. Then that money is managed by a fund manager, somebody who is experienced in managing money, to invest, and here is the important point, to invest in liquid, near liquid, interest-earning investment. And those would be bank deposits, there would be government treasury bills, treasury bonds, and to some instances, corporate bonds, that then yields return that is then distributed to the investors. So it's distributed back to you and me and to everyone else who has pulled their money together.
Yes, fantastic. In the simplest definition then, it's clear for anybody who does want to understand what money market funds is. Just again, on that particular point, Paul, is it important for me as an investor, giving you my money for investment, to understand which markets that you are taking this money into, or I should just look at the returns that the money market fund promises?
So market investment has two aspects. One, return, liquidity.
Yes.
So on the return bit, the idea is to ensure that we are giving an investor a return that is higher than what they would normally get if they just put their money in a bank account.
Yes.
Or if they try to invest on their own. So they enjoy the power of pulling together the money and to have it professionally managed. So that is number one. So return is important and liquidity is important. The second aspect of a money market fund is that, yes, an investor is provided with information about where the money gets invested and all other facts about how the money market fund is operated.
Yes.
And that information is available on a one-page document called a fact sheet. A fact sheet is very important. It's a summary of what the fund manager actually invests the money in, and that's good for transparency. And it also gives the investor a view of what the objective of the fund manager is and what benchmark the fund manager is looking to beat. Because at the end of the day, the fund manager is looking to beat a benchmark so that they prove to the investor that indeed they are worth managing their money.
Pretty much. All right. Now, let's then understand this money market for Standard Chartered Bank. There's a lot of collaborations here. Would you talk to us? We've seen names around that money market fund. Could you let us know these collaborations that the Standard Chartered Bank has gotten into just to realize this money market fund?
Thank you very much. So we understand that one of the things that Standard Chartered is very keen, and this is as a result of very intensive research that we've done in this market and other markets,
yes,
is that firstly, we need to help our Kenyans save. And you will agree with me that in the recent past, you've seen a lot of digital investments, a lot of digital apps on the credit side, helping clients to borrow. But let's face it, it is very important that actually Kenyans save money, because it's only by saving money and then growing, we actually create real wealth. So then we look at that problem and we told ourselves, or we asked ourselves, can we be able to do this alone? And the answer was no. You need to bring in like-minded people who have competencies in different areas of managing money and developing technology, so that we are able to then go into the market.
Yes.
So that is very important. And then that brings me to the point why then we went for this partner. So Sanlam Investment East Africa Limited is a known name in this market who have been managing clients' money for a very long time. So they are a known name. So that was very important. And also the second thing is actually they are not just in Kenya, they are across multiple countries in Africa. Just like Standard Chartered is also a global organization.
Yes.
Then Bamboo, who in the name they are called Mogostin, but actually they call themselves Bamboo in terms of how the trending name, is actually a renowned provider of wealth technology across the world. If you look at the top 100 wealth technology provider across the globe,
yes,
you'll actually find Bamboo's name there. And we looked out to them to offer us the technology capabilities to be able to get this investment vehicle completely 100% digitized and make it accessible to Kenyans.
Yes, fantastic. Now that is clear then. Now let me just get into the direct questions then, before we even get to know how somebody would get online and start trading in this money market fund. What returns are we looking at from this money market fund?
Yeah, so the returns are, since we launched, the returns have been above 9%. And
yes,
we publish this on our mobile app every day. So every day you see what the return was yesterday. That's the actual return that the client actually made. So it has mostly been above 9%. I will be able to, maybe by the end of the interview, give you what the number was yesterday.
Yes.
Yeah.
Fantastic. And we'll be looking at that when we're saying if the inflation rate is about 5.09%, 5.37% for the past 2 months, then that will be a proper return on investment. Is that what you're saying?
Absolutely. Any return you get that is above the inflation rate help you to create wealth. And that's the important fact there.
Yes.
9% is a very decent return for an investment that is liquid, in the sense that an investment that is not locked in any way. You can
yes,
be able to get in and get out at any time.
Yes.
So 9%, anything above 9%, in fact, I would say anything above the inflation rate in the country is a very worthy investment,
yes,
and it will help you create wealth. So that is important. Clients should be looking for investment that beats the inflation rate of the country. That is how wealth is created.
Pretty much. Now let's get to a direct question then that we got from one of our viewers. Immediately we floated your post that they're asking, should I be a Standard Chartered bank account holder for me to get started on this platform? Or I should not have, as long as I can get the mobile app, I'm in and I've started investing?
I hope you can hear me, right?
Yeah, Mr. Njoki, can you hear me as well?
Yes, I can hear you. So I'll just go back again. So yes, you need to be a Standard Chartered customer.
Yes.
And it's very very easy to become a Standard Chartered customer. Now, about 3-4 years ago, we launched the Standard Chartered Digital Bank.
Yes.
Meaning that you can actually run a bank on the app. So going to Google Play or Apple Store, you will download the SC Mobile App Kenya.
Yes.
And following a few steps, you are able to be onboarded as a Standard Chartered customer. So it's very easy. And by just putting in the money, you'll activate the account, and then you can be able to buy SC Shilingi funds. Now, why is it important that a customer, the customer is onboarded as a Standard Chartered customer? Now, remember that in the industry, we are a licensed organization. Standard Chartered Bank is licensed, and Standard Chartered Investment Services, which is actually the subsidiary that offer investment, is also licensed by the CMA. And part of the requirement that we have is that we have to perform client, know your client. It's important that we actually know who the client is. Then we also have to run certain checks to ensure that the money that we invest for the clients
Yes.
is not proceeds of crime or proceeds of money laundering. So it is very important that we actually get to onboard the client, we know who you are, and therefore then we are able to invest for you.
Pretty much. Now, let me ask you another direct question as well. The viewer, his name is Moses. Good. Moses is asking, how much in terms of the ceiling for investment can I actually get to invest in this money market fund? They know it's 1,000 shillings, but then what is the maximum amount for investment in this money market fund?
Okay. So there is absolutely no maximum amount. You can invest as much as you can possibly do.
Yes.
However,
Yes.
for every particular transaction, so every single transaction, the minimum is 1,000 shillings and the maximum is 1 million.
Yes.
And that's just for one transaction. You can do as many transactions as you want. So in that case, if you're looking to invest 10 million, it's within, you can actually do 10 transactions over a million each.
Yes.
You can invest even as up to 100 million or even more than that. So there is absolutely no limit on the upside. Pretty
much. Now, this is James as well. These are the direct questions that I'm getting. Now, he's asking the intervals of investments. We know market funds that go into quarters. There are some that go per year. What are the intervals on investments on this money market fund?
Okay, so the money market fund invests every single day at 9 a.m. in the morning.
Yes.
So if you put your money before we check at 6 a.m. So if you say, for example, at 5:59 you've actually invested. At 6 a.m. in the morning we do a digital cutoff. So basically we see how much money is coming, how many clients have put in,
yes.
And immediately we sweep money into the fund. And at 9 a.m. at the open of the market, the fund manager has the money and they're able to hit into the market that same day.
Yes.
So if you put your money early in the morning, same day you're invested. Now, if you put it during the day, so like today, like now, during the day today, if you put your money, then tomorrow morning, 9 a.m., the money will be invested. It is daily.
Yes.
It is daily. Yes.
It's a daily trade. Is that what you're saying, isn't it?
Absolutely daily, absolutely.
Yes, and I would like to understand why you took, we know other market funds that will tell you got to invest for the quarter and then wait for returns at the end of that particular quarter. What would you decide to make yours a daily trade? Is that something that is unique in the market for your fund?
So now, I think the first thing that we have to look at is the power of digital.
Yes.
When you put something on digital, it gives you a lot of variability and capability that you can actually now deploy to the clients to create more value for the client. So when we decided to launch SC Shilingi Fund, we were very clear that we wanted to offer the client the flexibility, the liquidity, and also, of course, the return.
Yes.
And for that reason, in fact, for us is even going into the future, we're continuously thinking, how can we even make it anytime, any minute? So we want to give clients flexibility because we understand that the client is looking to, people get money at different intervals. There are people who get money weekly, other gets monthly, other gets daily.
Yes.
And we don't want to say, fine, because you get your money daily, you have to wait until the end of the month so that you can put it, or you have to wait until the end of the week to put it. For us, is we want to make it open so that the client can come in at any time depending on how they actually earn their money. And we don't want the money to stay idle.
Fantastic. Now, just before I get into other details of it, this is a direct one as well. They're saying, are these returns a sure bet or there are shifts?
Okay. So the return is published daily. So
Yes.
every day you'll know the return for yesterday.
Yes.
There's nothing like sure bet in investing. If I
Yes.
ever said guarantee, my regulator would be right behind me asking me what am I talking about. Every investment comes with risks,
Yes.
and of course benefits. So
Yes.
there are the two sides of the coin: the return or the benefit, and of course the risks. Now, what do we do to ensure that our clients understand, of course, the return and also the risks? So the return is very easy. Right now, every day we publish it, we say, yesterday it was 9%, 9.2, 9 point whatever. Whatever the return is, the actual return, we actually communicate to the client. That gives the client an idea of how the investment is performing on a day-to-day basis, so
Yes.
which is very important. Okay?
Yes.
Of course, we are also projected that we want to beat a certain benchmark, which is the 90-day treasury bill rate. So also the fund manager has given guidance. This is the return we are looking to beat. We want to perform better than that.
Yes.
Now, on the risk side, part of the client journey that we take our clients through when the client is purchasing the fund is we ask a few questions. Actually, a very few questions, 3 questions. We ask, is it a term, a mid-term, or a short-term investment you are looking for? Do you have knowledge of investing in money market funds? And
Yes.
that kind of thing. So that we kind of have an assessment that the client is not putting the money for buying milk tomorrow into this fund, because that then will not be the right perspective for the client. We want
Yes.
to know at least the client is saving, into the meantime, maybe it's school fees for the kid, it's for a holiday, maybe it's to start off a home, wedding, car, whatever it is. So we want to know at least this client has this money for a given period of time, so then it becomes meaningful for the client.
Yes.
Now, of course, a money market fund, based on the fact that it invests in bank deposits, in treasury bills and bonds, and some part of it, corporate bonds, the overall risk of the fund is what is inherent in those particular investment vehicles. So it's the inherent risk in a bank deposit, the inherent risk in a treasury bill treasury bill investment. So that is the actual inherent risk. But of course, the fund manager, using their skill and experience, is able to reduce that overall risk, so that it's much better off for an investor to come through a fund which is professionally managed
Yes.
than they try to do it alone. Because the fund manager has a way of, on a daily basis, assessing the market and realizing where is the risk, what are the things that you need to do to mitigate that risk.
Fantastic. That's quite clear from that end. It's a direct question as well. When can I get in and when can I get out?
Anything.
Anytime. That's what you say. Seems to have lost Jockey there for a minute. I wanted to come back on that. But could you confirm you can get me?
Yes, I can get you.
Fantastic.
So I heard your question very clearly.
Yes.
So a client can get in anytime and they can get out anytime.
Yes. Fantastic.
Yeah. So absolutely, it's very liquid. It's in and out anytime. Plan one.
Yes, pretty much. But then, from what you're saying this morning, Mr. Jockey, how long would you advise an investor who's really looking into money market funds? What should be that investment strategy? Let's talk to them, or those who want to maybe go in for short-term or long-term investments. Should money market funds be for short-term investors or long-term investors? And from what you're saying, what is a short-term period for a money market fund, and what could be a long-term period for a money market fund?
Okay. So that's a very good question, and I get asked this question a lot.
Yes.
And it's about the time horizon. What time horizon is appropriate? And that indeed is I would say is a personal decision.
Yes.
Okay. So the product is available to be able to offer you a short-term investment capability. Say you are saving up to a wedding coming up in 6 months, so no problem. You are saving for holiday coming up in December, no problem. But also for longer term needs, like you're saving for your college fees for your child that's coming up in 5 years, or you're saving it for your retirement coming up in 20 years. So this product is versatile, it's able to accommodate the various clients' needs, right? Now, but what do we recommend as financial advisors? What do we actually recommend? We always recommend that clients have a mid to long-term view about investing, because
Yes.
in and out, really, in anything, not just investing, but anything you do, if you come quickly and you're getting out quickly, ultimately you don't get the ultimate return that that you can possibly do. So it's always good for a client to have at least a mid to long-term investment horizon, so that it actually become worthwhile in anything you do in life. It's not just in investment, so that it becomes actually worthwhile and you can actually create wealth. Because at the end of the day, we are wealth managers, we are investment advisors. We want to help our clients achieve their life goals. So
yes.
That college education for your kid, that for a new home, that retirement goal that you have, that is really what we are focused on. I know there's obviously some clients want some short-term goals, and of course you meet them through this product, but really our advice is, take the long run, take the mid-long run. It will really pay off for you as an investor.
Pretty much. Now, just before we clear, it comes at a time when we have already looked at results from majority of the banking quarters in the country, and what is standing out is that this sort of income to majority of the banks is actually growing. Case in point, your bank as well, that did give us a stellar result. Would you say that these money market funds now are deeply entrenched in the Kenyan economy, or it's when we're just beginning now?
We are just beginning. We are actually just beginning. I must tell you that.
Yes.
Kenyans has an investable population of up to, I would say, 20 million
yes.
Kenyans.
Yes.
Their investable population. If you look at how many actual Kenyans are actually investing in any single piece of product in investment, it's actually a very dismal number.
Yes.
We did a research recently, and we found that in Kenya, 49% of all Kenyans below the age of 35 have not started saving for retirement. 49%, that's half of the population below that age of 35. And Kenya has a big population of below the 45. Now, when you went to the age, below the age of 35, when you went to the age of 45, we found that 27%, that's 3 in 10 clients, had not started. And at the age of 55, we found 19%, which is 2 in 10, had not started. So we are facing a big issue
yes.
in this country. Now, if you change these metrics and you look from a credit point of view, look at people consuming loans, the numbers are the other way. People, actually very young people, are starting to borrow and borrow quite heavily, right? So I think as a country, and this is not our Standard Chartered Bank objective alone, it should be objective of any player in the financial markets, we all need to come together to help our clients, our Kenyans, start saving. There's no other way of creating wealth than first to save. That's how we start. If you start with the loan side, you'll always be in that cycle of borrowing, and you'll never really create meaningful wealth. So I think it's a big challenge that we have in our country. It's a challenge that all of us need to face and solve as financial players in this space. So actually welcome more people into this space so that we can help our Kenyans. It's very important that we actually help our Kenyans achieve their life goals.
Pretty much. Now, I'm going to ask you this, and I want you to respond in just a minute, because that's the only time that we have. Somebody's asking, I've got my savings now. Are you saying then, instead of this money sitting in my bank account because I've got a savings goal, I can actually transfer all this money in this money market fund and let it sit for 1 or 2 years, and then I can use this as my saving strategy? And I want you to clear this morning, Mr. Paul Njoki, by again telling us how we can get started. Because somebody who's insisting, can you let him repeat on how to start, how to get the app and how to get started? Just those 2 questions in a minute so that we can actually get you clear.
Yes. Okay, thank you. So in any savings you do, always look if you are beating the inflation rate of the country. And the inflation rate is published by central bank, by other data sources. So you'll be able to know. I think it's around 5% at this stage. So always ask yourself, for you to meaningfully make wealth, you need to beat the inflation rate. So always look for investment options that allow you to beat inflation. So if the savings account you have is beating inflation, well and good. If it's not, I think it's time to review that goal and see if SC Shilingi Fund or indeed money market fund may be just the product for you.
Yes.
Now, how do you get started? So again, it's very easy. You need to download the SC mobile app on Google Play or Apple Store. So that is SC mobile app Kenya. So select Kenya because obviously Standard is in many markets.
Yes.
So make sure you are selecting Kenya. You'll go through a very simple onboarding process. have your national ID with you. You'll be able to take a selfie as part of the journey. So be in a good background so that you can take a good selfie. And then you walk through the steps and open a bank account. Then you are able to fund that account either through M-Pesa or any of the money, or you can do a bank transfer, or you can walk to one of the branches and deposit money. And from there on, you can actually go to SC Shilingi Fund is under the investing tab. So when you have the app, you look at the investing tab, and that's where SC Shilingi is. And again, it's very simple steps, and you're able to complete that 100% digitally, and you'll be invested.
Fantastic.
Of course, if you want more information, you can check us up on our website, on our call center. We are very active on Instagram, Twitter, Facebook, so you'll be able to see more information there. And of course, you can DM us, and we'll be able to get back to you to give you further details.
There's no better way to start this Friday conversations on exactly how then you can even start securing your future. I mean, that particular on that 49% of all Kenyans below 35 have not started saving for retirement. That's almost half of the youth population in this country, and that's where the majority is. It's time for you to start thinking that as low as 1,000 shillings today, you can actually start to chart your way. You can become an investor. You can become a business person from where you're sitting today in the morning. That's exactly what makes us proud here at Business AM, and especially Metropole Television, because indeed, if you can improve your state of finances, then we are not doing so much. Thank you very much, Mr. Paul Njoki, Head of Wealth Management, Standard Chartered Bank, for taking your time to speak to us here at Metropole Television.
Thank you very much for having us. Thank you very much, Bob. Appreciate it. Have a good day.
Anytime. All right, want to talk to him? You do know what to do at Metropole TVKE across all your social media platforms. I am at Kiage Simba. Thank you very much for those questions. Let others continue online. We know what to do. We shall be sending them straight to them as well, so they can get to actually respond back to you. We take a short break. Once we come back, let's look at equity and NCBA. Let's talk about those results. The big boy now in that 1 trillion valuation of equity have they knocked off Cooperative Bank from position 3 and KCB from position 1? That is the conversation that we're going to have this morning here on Metropole Television once we come back.